Welcome, everybody. My name is Jeff Amrine. I'm the managing director and founder of the Startup Junkie, and we work closely with our partners, the Conductor. Welcome to our digital library. During the course of many different episodes that we're going to feature, you're going to learn about Lean Canvas, how to run a startup, how to build a startup, customer discovery, and a variety of other topics. Welcome. We hope you enjoy it.
Hello, I'm Martha Londagin. I'm an executive business consultant with the Startup Junkie Foundation. I'm here today to talk to you about getting your business idea off the ground. We're going to talk about businesses in general and how one starts one, or how one takes a side hustle or a home-based business to the next level. I'll try to address all different types of businesses and different levels of business stages, but mostly I just want you to know that I'm going to give you a lot of information, and it seems like a lot to take in, but the business journey is a journey. It's one step at a time. It's one day at a time. And I've seen many people over the past 8 years that I've been working with small businesses take this plan and execute it starting at different stages. So the main thing is to gather information, to look at the steps, decide what's right for you and what stage you're in, and then to seek guidance and assistance from area resources. And I will talk about some of those resources that we have available in Northwest Arkansas, the vast majority of them at no cost. So reaching out, getting help, asking questions, gathering information is probably the biggest and best piece of advice I can give you if you're thinking about becoming a small business owner or some sort of entrepreneur. My background is that I have worked in business development as a consultant for businesses with the Startup Junkie Foundation. Of course, I've been there for about a year now. And then prior to that, I was a small business banker at Legacy National Bank in Springdale, doing mostly small business loans, SBA loans. And I'm going to talk about the U.S. Small Business Administration a little bit. Prior to that, I was a business consultant at the Arkansas Small Business and Technology Development Center at the University of Arkansas. And my husband and I have owned our own small business for 16 years, and I am a fifth generation small business owner. My family's been in Northwest Arkansas since the early 1850s, owning multiple small businesses. So that's my background. I think the greatest experience I have to share with you is the small business owners, the entrepreneurs that I have worked with, hundreds and hundreds of them for the past 8 years in Northwest Arkansas. So we're going to talk a little bit about planning, and we like to use a basic planning device called the Lean Canvas at Startup Junkie, and you'll be seeing a slide of what that Lean Canvas looks like. The Lean Canvas can then be developed into a formal business plan, especially if you're seeking funding from a lender or a bank or an investor. They may want something more detailed. We're going to talk about financing options and then the resources in Northwest Arkansas. The first thing you want to talk about is the market. You can have the best widget, the best service, the best idea in the world, but if no one wants to buy it, or people don't understand how it can help them or make their lives better, then you're not going to be successful with your business. You need to determine, is there a demand for your product or service? And we call this customer discovery, customer development. These are vital parts of the very first steps of being a small business owner. Oftentimes, people have had others ask them for their product or ask them to help with something, and so the customer development has come to them naturally. But frequently when we meet with clients, they'll have this great idea for something that's never been in Northwest Arkansas. We need this here. It's never been here. Sometimes, because I'm old and I've worked around in small business for many years, I'll let them know that perhaps that business did used to exist, and here's why it didn't work out here. Sometimes having the brand new thing is what the community wants, but sometimes it's because it's been tried before and there's really not a good market fit for it. And there are many ways to discover customer development. It doesn't mean that you have to go hire a marketing company to take polls and surveys. It can be making up your own surveys and testing your product with people that you know in your community. We often advise people to be sure and go to the public to test with surveys or with one-on-one consultations, people that don't know you, because sometimes your friends and family will tell you because they love you that your idea is wonderful. And especially if your friends and family are not potential target consumers, that's not really relevant help for you. The next thing with market research is you need to know your competition. Who is doing what you already do exactly? What level, what scale? You can look at their social media posts to see how people are reacting to their products and services. You can look at their website to see where they're selling and how they're marketing their goods. Knowing your competition is extremely important, and especially if you're going to go to a bank, a banker is going to expect to know that you know the competition. And we're going to talk a little bit about the unique value proposition. That's a section of the Lean Canvas plan and should be in every business plan. Some people call it solving a problem, but I don't like to just call it solving a problem. The example I give people is like a certain brand of $300 blue jeans. Nobody has a problem of needing a $300 pair of blue jeans, but they want it. And your unique value proposition may be that you looked into finding that service provider or that creator of those jeans, and you're going to be the only person in Northwest Arkansas who gets to sell them. So that's your unique value proposition. You can't get these $300 jeans anywhere. Nobody needs those, and they're not really solving a problem, but people want them. So looking for a problem to solve to attract customers, looking for a need in the community, or figuring out what is unique and special about you. Why is anyone going to come to your store or seek your services or buy your product versus others? Next one is, let's talk about you. What's your background? Why did you develop this product? Why are you going to be good at this service? Why would people see you as an expert in the field or an owner as someone that they could buy that good from or seek that service from? When I was in banking, I would sometimes get calls from people who had lucked into some money or exited a major corporation, and they would, for example, say, I want to open a coffee shop. And my first answer would be, wonderful, what's your background in working in a coffee shop or running a coffee shop or making coffee? And they would say, well, I like coffee. Well, I like coffee too. And that's important. You should like what you're doing for a living and you should like your product. But what I would say to those people often is, well, now that you've exited so-and-so corporation, why don't you go get a job in a coffee shop, work there for 6 months to a year, and come back to me? Sometimes those people didn't call back. And one thing you have to realize is, as a small business owner, you have to be able to run the business by yourself if necessary. I have known restaurants and bars and coffee shops where several of the people on the crew decided they weren't happy there anymore, and one person got a job offer, and within 2 or 3 days, half the crew was gone. You have to be able to be there that Saturday morning at 6 a.m. and open the drive-through of your coffee shop. You have to have that experience, and the background and the reputation you may have in that area, in that arena, is extremely important. We have to know that you can run the daily operations of the business, that you know how to take the orders online and package the goods and where you all go to ship them in case something were to happen to your crew. Who's going to take care of the books? Now, this is one area I tell people you don't have to be an expert. Say you are an artist and you've had people asking for a certain format of your art and you think there's a huge demand out there for it. And so you want to create a website and start selling your art product in a certain way. I'm not saying you have to be a CPA. Certain things like getting an attorney to help you with contracts, a CPA to help you understand the taxes, a bookkeeper to help you set up your books. Those are things, of course, that you can hire. But yet, you need to understand that process. You need to understand how your books are set up and explain your income streams to your accountant. Who's going to perform services or deal with customers? Not everyone is a really great people person. Not everyone is a saleswoman or a salesman. So maybe you don't have that forward-facing personality, but you're very passionate about what you make and what you do. It's perfectly acceptable to hire salespeople, but yet at the same time, you need to be very involved with them and making sure that the way they're selling your product, the way they're pitching your services is true to the mission and statement of your business. Next area, so we've talked about making sure you have customers. What's your background, your expertise for running the business? Next is, how do you get money to do that? I would say, quite honestly, about 60% of the small businesses I work with, and when I say small businesses, the majority of the hundreds of businesses I've worked with have had less than 10 employees, have not been huge major market corporations. They've had one location or one website. So many of the people I work with start with their own personal savings, or they get loans from friends and family and don't need loans from lenders. In all of those situations, you still need in your business plan to be plotting out your financial needs, forecasting what are our needs going to be? What are our slow months? Do we need a line of credit for those? Even if we don't need money to start out, are there going to be certain months? Like if you're in the restaurant business in Fayetteville, Arkansas, I can guarantee you better be preparing for a slow December and January. Those months are going to be slow. And unless you have a fancy place that's romantic and wonderful until, Valentine's Day, that could still be a slow season for you. So you need to have your financing planned out regardless of whether or not you need to borrow money. Even if you borrow money from friends and family, there needs to be an attorney involved and there needs to be a note and a loan agreement, because life happens. That person could go into bankruptcy. That person could get divorced. That person could pass away. And then other people, the courts, an ex-spouse, heirs have an interest in that money that was owed to this person who loaned it to you. So even at that level, you need to have formal agreements in place. If you're purely starting a business and are just going from absolutely nothing into a brick and mortar store or into a service location, you need to get together all your startup costs. We have a lot of wonderful resources in Northwest Arkansas and resource partners that I'm going to talk to you about in a little bit, who will help you create cash flow projections, who will help you create startup lists of costs, but you have to do that work. No business consultant I know is going to go out and call business insurance companies and get quotes for you. No one I know is going to research the cost of the dining room tables in your coffee shop. So you have to do that street work yourself. At our office, we have a list of lots of business insurance companies, CPAs and bookkeepers, attorneys who like and want to work with small business owners. So we will help guide you, as will other resources in the area, Chambers of Commerce, the Arkansas Small Business and Technology Development Center in Fayetteville. We'll guide you to some resource providers, but it's up to you to do that work and to put together a complete list, not guessing, not thinking, oh, I figure business insurance for this costs $2,000 a year. You need to get the quotes, because you have to get together the entire list of startup costs, especially for a bank loan. They're going to expect you to inject 10, 15, or 20% of your own personal assets. So you need to know that total. So you can see on this slide here that will be appearing on your screen the lean canvas map. And you can see that there are a grid of boxes that begin to plot out the basics of thinking about your business. This can then be expanded, such as down on the bottom right, you'll see revenue streams. That could be several pages in your final business plan if you're presenting it to a formal bank, of detailing out revenue from catering, revenue from lunch sales, breakfast sales, bar sales, merchandise. All of those things can be lined out, but these are the basics. Starting on the left, we have what we call the problem, which is typically people want you to solve a problem for them, and then they'll seek your good to do that, or seek your services. So for example, I've had people come in who want to start a new nail salon, and I will say to them, well, I already have a nail salon that I go to. So one, in the middle, you can see on the lean canvas map, what's your unique value proposition? Why would I leave my hair salon? Sometimes the unique value proposition bleeds over to the problem. Say the problem is, I've been going to a nail salon that has terrible parking and it's in a very busy section of town. If you possibly locate your nail salon closer to my house with easier parking, more expanded hours, it may not even be the point that I think you're better than my nail tech, but you're going to solve the problem of the time crunch. I often don't have time to go get a manicure or pedicure because I don't want to fight the traffic to get to the salon that I go to. So there's your solution. What is the solution you're providing? The solution is we're providing a better location and expanded hours, and thus we can provide the nail services you need in a better manner. Unfair advantage is where we talk about what does your business do that no one else knows how to do. An unfair advantage for perhaps a consultant exiting a major corporation is you have extremely good knowledge about consumer packaged goods, and maybe even yours is specifically about children's wear. And so you have an unfair advantage if you wanted to open a children's clothing store in Northwest Arkansas, in that you have access to suppliers. You already know what is forecasted for the next few years in young girls' clothing, colors, and things like that. You might have an unfair advantage because you know things about the industry that other people don't know. We're going to look on the map. If you'll look on the key metrics, you need to be setting up metrics and goals to meet for your business each month, and forecasting that out and making sure you're meeting those goals. You need to have different channels and different ways to get your product out there, be it online sales, delivery. If you're a restaurant, what are the multiple ways? You're going to have in-house dining. Do you have grab and go in the restaurant? Do you have catering? Do you have takeaway orders? We need to know all the channels that you're going to have to get your product or service out to people and earn income. What are the different customer segments? This is a really important part of the Lean Canvas and conversation I have with people. Your target consumer cannot be living, breathing humans with money unless you have about $1 billion marketing budget, or about $1 billion to provide a business that serves all of those people. It is best to start out with what you're already good at. It's best to build from the customers who are already huge fans of your product or your service, and let them tell your story to others and bring people in that you're really, really good at this. Then listen to your customers when they say, well, I like that shirt in that style, but I really wish you had a short sleeve version, and I really wish you offered it with a little shorter tail in the back, and it'd be super great if it came in this color. So you can grow your customer segments by listening to the needs of the customers and the things they tell you. So your customer segments can grow. You can offer one service just to residential homes, and then you begin to meet people in those homes who own businesses, and be open to them and listen to what they say about potentially taking your business to a commercial level. So don't try to serve the whole world at the beginning. You can have a plan in your business plan to eventually expand into other services. Lots of restaurants start out just brick and mortar, serving people who come in the door. And then as time goes by and they find out the easiest, most inexpensive foods to make, the foods that keep the best, then they expand into catering. Attorneys and accountants are an area that you really have got to seek some advice on unless you are already a small business attorney or an accountant. And when I say small business, I mean small business. We have a list of attorneys and bookkeepers and accountants at our office. They are people we have spoken to regularly that have worked with our clients, who actually want to work with startups, who actually want to work with small businesses. Because I got news for you. Startup business owners are very needy people. They have a lot of questions. And what I tell people is it's better to get an attorney that does small business day in and day out, because half the time the forms that you need, they will have prepared by a paralegal whose hourly rate is half of theirs. And then they just review them for you, because that's what their office regularly does. Your sister's divorce attorney may be the best divorce lawyer in the world, but that doesn't mean that she or he is a good business attorney. And when you develop the relationship with them and set up your legal entity, which we're going to talk about legal entities a little bit in a minute, you really get someone to explain to you how to limit your liability with an LLC. That's the whole point of it. You get someone to explain to you how to draft some basic contract templates to protect yourself. It doesn't mean that you're going to have to pay them every single time you need something, but it's great to have someone who has fully explained the business to you. For example, how to sign contracts once you become a member manager of an LLC. It's vitally important. If you sign a contract just your name and don't put member manager of Susie's Dresses LLC, you are now personally liable on that contract. So yes, there are online resources that will help you draft pieces of paper that say you're a limited liability company. But if you don't understand how to operate that, it doesn't do you any good. And it's worth every penny you will spend to develop a relationship with a small business attorney. And as you go through time and pay your bills, they'll take quick calls from you and help answer small legal questions. Same thing with an accountant. You may be the world's greatest software guru and you know how to operate QuickBooks, but junk in, junk out. QuickBooks can't create proper reports if you don't understand the categories. We have people in Northwest Arkansas you can hire to teach you how to properly categorize your income and your expenses and use QuickBooks. There are 12 or 13 versions of QuickBooks online. How do you know which one to buy that's going to work with the buying system on your website? So attorneys and accountants are vital to seek some early training from. And then over time, maybe you can prepare yourself to be your own kind of accountant and your own attorney who kind of drafts different paragraphs in your contract. But initially, those are absolutely vital people to reach out to and hire. And so now on the screen, we will talk a bit about registering your business name and incorporating your business. On the left screen, you will see articles of incorporation or organization that are filed with the Secretary of State. On the right side, you will see doing business as, which is where you're just a sole proprietor who is just making a product, selling a product, and haven't legally incorporated. Sometimes people take these terms and go back and forth on both sides, and they're really very different. So on the left, if you file a corporate as a corporation or as an LLC, which an LLC really is a type of corporation, that entity gets its own tax ID number that starts with 2 numbers and a dash instead of 3 numbers and a dash. It is its own existing entity, and you might be the member manager of it. You might be the president of it. You might be the largest shareholder of it, but it is not you as a person. For example, if you set up an LLC and have enough income to make yourself an employee of the LLC, you are not self-employed. You are employed by that LLC. So those are the major areas. C corporation is what major corporations are, like Walmart, Best Buy, etc. And S corporation is where you have articles of incorporation and bylaws. You have a board, you have a president and a secretary, and you have to keep minutes. It is very rare today to have someone initially set themselves up as an S corp. Since the LLCs, which is the limited liability companies, came out in the 80s, they are much simpler. You don't have to keep minute books. You don't have to vote on every decision. You can make someone a member manager, and that person can make all the decisions. So the S Corp does, however, have tax advantages once you make yourself an employee, especially. So do know you can set up an LLC, operate it for a year, see how things are going, and then your accountant can apply to the IRS to have you taxed as an S Corp. You don't have to recreate a new corporation. All of these things are those items that you should discuss with an attorney, but I would say 95% of the people I work with set up an LLC. These all have a federal employer identification number that is assigned to it. Now, on the right-hand side is the example I gave you of Susie's pageant dresses. Susie starts making pageant dresses for her nieces. Everybody loves them and wants Susie to make dresses for them. And so Susie's doing that in her garage and making a pretty good living. She calls it Susie's Pageant Dresses. Her name is Susie Jones, so her DBA is Susie's Pageant Dresses. I advise people who are doing that to go to the county clerk's office and file a DBA certificate. The counties and cities in our state have a right to know that you're operating a business there. You should also consider getting a city license. They'll have the city fire inspector call you to make sure that you're not letting people come to your garage and try on the dresses and buy the dresses there, because that would be improper zoning. Your home is not zoned as a commercial place, and therefore you could have dangers there to the public. But you're just doing business out of your garage, making those dresses, delivering them to people, going to people's homes and measuring them, etc. So that's the 2 different ways you can do this. What I advise people to do, you don't have to set up an LLC initially, but it's a great idea to set up a bank account. So the bank account would be a business checking account. It would have your Social Security on it, and it would say doing business as Susie's Pageant Dresses. Versus the other side, which is the LLC, would have its tax ID number that you got from the IRS once you created the LLC, and it would have a separate business account, and you would just be an authorized person on that account, an authorized signatory. Partnerships are listed. I don't know anybody or why anyone would do a partnership. We used to do partnerships before we had LLCs because they were easier than messing with all the requirements of an S Corp, but I can't imagine any attorney ever advising anyone to do a partnership anymore. People will call themselves partners, but they're typically co-owners, members of an LLC. So, as we progress now into the formal business plan, you will see this is an expansion of the items we had in the Lean Canvas part. And here I also want to start, when you're going to start getting really serious about your business, here's a little thing I want to talk to you about, and that's the name of your business. If you'll recall, I talked about how you can go to the Secretary of State's office and form an LLC. Sometimes that LLC name is going to be the name you use in the public with the business, and sometimes it's not. Sometimes you want that LLC name to be, Jones Family Holdings LLC, but yet the name of the business is Caboodle's Dog Care. On the LLC side, that would be called a fictitious name. If you're just doing it yourself and just calling it Martha's Caboodle's Dog Care, the DBA, you file with the county, and that's notice to the county. But when you file for a formal business entity, an LLC with the Secretary of State's office in Little Rock, that becomes notice to all 75 counties in Arkansas that you are operating a business. If you're not operating the business under the Jones Family Business Holdings LLC, then you file a certificate called a fictitious name. So if you're an LLC and you use a different name besides the name of the LLC for your business, that's a fictitious name. If you're an individual and you're just operating a business and printing business cards and putting that on your website, that's a doing business as, and you have to file in each county in which you're basing that business. So the formal business plan is what you need to go to approach a bank or a lender. Of course, it's not a bad idea to just do a formal business plan yourself so that you're really plotting and planning your business. You're putting all your startup costs together. You're really describing your mission, what the purpose of your business is, who your customers are. You can see on the slide that it talks about market analysis. Once again, customer development. Who are your target consumers? What's the strategic plan? What's your competitive advantage? Are you going to do what a big business does, but in a leaner way, cheaper and faster and more accessible? Marketing plan. Marketing becomes very, very important. Any startup business, especially ones that are going to have a brick and mortar location, I am telling these days, at minimum, you have got to have about a $15,000 marketing budget. You can't just open a store in Northwest Arkansas and expect the whole world to know about it. Now, if you can build your own website and don't need to hire one of our great little local marketing companies to build a website for you, that'll save you several $1,000s. But even if you know how to build a website on Wix or Weebly or on Shopify, do you understand Google and search engine optimization and keywords and how to make sure that people actually find you when they're doing searches? Social media is absolutely 100% vital. I have seen businesses that started out of bedrooms and garages in their homes grow in several years, in the past several years of my existence as a business consultant, in just a short time, to major market players with hundreds of thousands of followers on social media, millions of dollars in revenue, all spread because they became influencers on social media. If you're not good at social media, if you don't like social media, then you need to seek consultations from people who are good at it, because it is absolutely vital. I also encourage people to be sure that they have a LinkedIn business listing and a personal LinkedIn business owner listing. LinkedIn is absolutely vital. It is important because, one, LinkedIn is all words and Google loves words. And if you're a business owner, you need to have a Google business listing box. You need to have a LinkedIn profile. You are a business, whether you're operating out of your home and you just remotely visit with people, or if you're a brick and mortar but you're selling art and trinkets. Take yourself seriously as a business and make sure that you have a formal marketing plan put together. You need to be drafting out the organizational plan. Who's going to do what? Who are the key employees? If you have employees, even if it's you and just you alone, you need to have an organizational plan. What part of the day are you going to spend planning? What part of the day are you actually interacting with customers? What part of the day are you developing new customers? Financial plan becomes extremely important, and you'll see on the slide it talks about having a balance sheet, which is where you list the liabilities of the business and the assets. An income statement, or also called a P&L, profit and loss. You need to be running cash flow projections and understanding the cost of goods and income and know your break-even amount every month. To me, that is the most vital financial piece of information every small business owner needs to know. What is my break-even point? How much income do I need to bring in every month to know that all the bills and expenses are paid, and then I can begin to look at profit. So know your break-even for each month. Talking about financing, you can see a list of different types of financing. We've talked a little bit about starting out with savings, loans from friends and family. If you are purchasing a major piece of equipment leasing companies are a great source. If that's all you need is to buy a bulldozer or a dump truck, then reach out to a bank or the company that sells that and get some rates. And sometimes that's the easiest, fastest way to get that piece of equipment. Bank financing becomes a little more complicated in that you're going to start having credit score requirements. There are different types of bank loans. There are in-house bank loans, and there are U.S. Small Business Administration backed and guaranteed small business loans. And some banks do SBA lending and some banks don't. So that becomes a vital issue. And I'll talk a little bit later about the difference between those two types of loans. They're all alternative financing options. I know a lot of people who have started small businesses with credit cards. When I was a banker, I would have people contact me that had been in business 2 to 3 years. Their business was experiencing major growth. They needed new funding, and they had this old credit card debt at 16, 17, 18, 19% that was just killing them. And so the SBA program especially is a really good one. The banks are more comfortable making SBA loans because they fill out some extra paperwork, they've been approved, and they get guarantees from the government that if your loan fails, they'll get a certain percentage of that back from the government if they process the loan correctly. And sometimes you can take in old debt, bad online loans that you took out because you were in a cash flow crunch, credit card debt with extremely high interest rates, and you can get that refinanced into a longer term to lower your monthly payment with a lower interest rate. So be very, very careful about online loans. There's companies out there that they'll talk about how they just have a 3% fee, and people think that's a 3% annual rate of interest, and it's not. It's a daily 3% fee, which calculates out to sometimes be 23 to 27% interest. So if you are not a guru about online lending, you need to get some help and advice from someone in finance before you take out those loans. Venture and investor capital, where someone comes in and invests in you and in turn gets a percentage of your company, or where someone just invests in you and they have an agreement that in so many years they're going to get their investment back plus certain amounts of interest. And so those can be very helpful to you, but at the same time, you are potentially losing control of your company. We advise people frequently to not take on investors early on, to grow their business and know their business and own it. And if you do seek investors and do think about doing something like you see on the TV show Shark Tank, which we had a person from Northwest Arkansas on Shark Tank, the national entrepreneur show, they don't just give you money for nothing. And there's no such thing as a silent partner. Absolutely not. No one is silent when they give you money and they see you doing things they don't like. So I tend to tell people I'd rather see you take out debt and control your company than bring in an investor. Now, we also at Startup Junkie work with companies that are going national, and we're talking about needing millions of dollars of money. And sometimes their company's so new they can't get a bank loan. So yes, obviously venture investment or angel investors is an option for them. But seek advice from people who are professionals that you trust in that, and make sure you very clearly take any investor agreements to an attorney and have those examined for you. So, about financing, don't assume you're going to get a loan. Don't go sign a lease thinking you're going to get a loan, because once you sign the lease, you owe that $800 a month for 5 years. And they don't care if you got a bank loan or not. Never assume that you're going to get financing. Go talk to a small business banker in person. Do not pick up an application in the drive-thru and drop it back off. Ask other small business owners you know. Ask around the community. Investigate who are the banks that really want to invest in small business, because you're going to get a loan officer who's good at that. And not only can they loan you money, take some advice from them. Lots of small business loan officers have worked with hundreds and hundreds of small businesses. They have some really good background, some really good advice to give you. And so they are part of your resources. Don't expect to get a grant. Grants are typically monies from the government to support entities or individuals who do things for the community at large. Nonprofits that feed homeless people take a burden off the government. So the government is happy to have grant programs to fund day shelters and food banks, because that takes a burden off the government. The government doesn't need help with people having more women's shoes and clothing stores. That's not an essential government need. So there aren't any grants to help a woman open a clothing store. The way the government helps a woman entrepreneur open a clothing store is it offers SBA loans to community banks, so the banks are more comfortable making those loans, and it gives that woman entrepreneur a chance to get a loan for less money down and a longer term and make a go of her business. So there aren't any grants that I know of for someone to just go open and start a typical small business. Don't expect 100% financing. With the SBA loan program, the minimum a startup must have is 10% down. So if you run all your startup costs, it's going to cost you $400,000 to open your women's clothing boutique. The bank is going to expect you to have $40,000 of your own capital to open the business checking account. And the first $40,000 will be spent by you, probably for partial payment to the build-out contractor or for the clothing, the first order of inventory, and then the bank loan kicks in. You must show some investment in the business. There won't be any 0% down. Now, sometimes you can approach a bank that doesn't do SBA lending. They do what we call in-house loans. They just approve their own loans, make their own underwriting decisions, and they may want more, 15 or 20% down, but their interest rate might be better than the SBA loans. The SBA loans typically have a higher interest rate charge because of the risk, and that's partly why they're more attractive to banks. So if you have a really good credit score, if you have some outside collateral you can pledge, if you have a lake house that you own that you wouldn't mind letting them put a mortgage on, if you have some very expensive equipment that's very reputable equipment that could be easily bought and sold on the market, and you pledge that, all of those things are part of the total picture. You might be, if you're more experienced in business and have a reputation, be able to get a better loan from a community bank on their in-house program than an SBA program. So these slides give you some more information about those SBA loans. The loan comes from the bank, but the SBA, the Small Business Administration in Washington, D.C., a wholly owned corporation of the U.S. government, backs and guarantees the loan. The typical rate is prime, which the prime rate floats. The government controls that. So let's say the prime rate's at 5. So 5 plus 275, that's how much the bank could loan. So that's 7 and 7, that'd be 7.75%. And people say, well, that's really high. Why is it so high? My home loan is 3.4. Home loans are the least risky loans there are. The riskier the loan is, the higher the rate goes. Now, if you're an established business and have great credit, the bank might just do prime plus 1. That's up to the bank, but they can't go above 2.75. The SBA loans give you longer terms. You could open a store and do build out and equipment and possibly get a 10-year note, which lowers your payment, versus a 5-year note, which is probably all you're going to be offered with the bank's in-house. They don't like to let those go more than 5 years. The last thing I want to talk to you about with business loans, everyone knows typically about the principal and interest. You get a loan, you have a set term, you make a set payment every month. But a really great product that the banks offer in-house and SBA are lines of credit. And that's where you apply and get, say, a $25,000 line of credit to use when you need it. It just sits there. If you don't draw down, say it's a $25,000 line of credit and you don't need to use it at all, you won't get a bill every month. It just sits there. It's available to you. But say a great opportunity comes up, you find out about some inventory that's being sold very cheaply out of a warehouse in Oklahoma. You can call your loan officer and she or he can just drop $5,000, $10,000 into your business checking account. You get the money immediately. You run by this great inventory opportunity you found. And then for the next few months, you can pay interest only on that. Once you sell that inventory and make a killing on that great low-cost inventory that you bought, then you pay back the principal at your desired rate. Now, the great thing about this is it's available to you at all time. It's also available for emergencies if you hit an unexpected slow season or a tornado blows through town. But the bank does expect you to make principal payments. You can't just let it sit and pay interest only forever. Because then when it renews every year with an in-house loan, or if you can get an SBA line of credit every 3 years, the bank's going to say, if you aren't using this up and down, paying it down, drawing it up, paying it down, drawing it up, then they will roll it into a principal and interest note and make you pay it out on a set schedule, and you've lost your line of credit. But line of credit is a great way to also not use credit card debt so much. There is a fee with SBA loans. You can have that funded by the bank, and then the bank sends that fee to the U.S. Small Business Administration in Washington, D.C. That's how they fund themselves. That's how they have all the hundreds and hundreds of employees who help administer this loan program. Do be prepared to have a credit history check. Typically, SBA lenders like a 680 or a 700 credit score. Be prepared to offer up a second mortgage on your home, especially if the loan is over $200,000 or $250,000. And know that you have to have 10% of any total loan need at minimum to inject into the business yourself. The SBA does also have background history requirements. It's difficult to get an SBA loan if you have a felony conviction. You must be a U.S. citizen or have a green card, and you can't have ever failed on any other government loan. So once again, I'll go back to what I said at the very beginning about financing. Go find a local small business banker who does lots of small business loans. Talk to that person. Plan for your business. You may have big dreams, and they may tell you, we can't do that right now. You've got to repair this in your credit, or you've got to save up this much, or think about starting online and then going to a brick and mortar store later. So talking to a small business banker can really help you plan your business. In-house bank loans have their own standards. They don't have to use a government guide, a government standard operating procedure. They can make their own decisions, may have a better interest rate. And as the slide says, banks can make quicker, more flexible decisions when they're made in-house. They don't have to check with someone in Washington, D.C. or their district SBA rep about decisions with your collateral and changes you need. It's good to work with a bank you already know and you already have a home loan with or a checking account with. But if your bank doesn't do a lot of small business lending, you don't have to have a bank account there to go talk to them. They will eventually want you to have at least a business checking account if you do get a loan with them. So next is some of the non-fun stuff for a startup. Making sure that you have a proper permit and license and a tax account. This is where I go back to the very beginning. You've got to consult with a small business accountant. You've got to check with the city and the county, check with licensing boards. Notice on the third bullet on this slide, check zoning laws for your location. You don't just get to open a business in your house because you want to. There may be city zoning laws. There may be property owner association covenants on your land. There are some very nice housing additions in Northwest Arkansas that specifically have covenants that say no home office. And you say, well, what difference does it make to my neighbors if I have a home office? They don't want FedEx trucks going up and down their street. They have a residential neighborhood, and you start growing this little business out of your garage and you got 15 FedEx trucks coming up and down the street. You got people coming in there to meet with you. That's not what they bargained for. They don't live in a strip mall. They live in a neighborhood. So you better be sure that you have the ability and the right. And most cities in Northwest Arkansas, you are not allowed to operate a home office or a consulting business and have people from the public come into your home for business services. So I will warn you on that to make sure you are getting the proper permits and licenses. The Department of Finance and Administration, DFA, for the state of Arkansas, can give you guidance on whether or not you need to pay sales tax or use tax. I don't spend a lot of time in my presentation explaining those to people because I am not an accountant, and I don't want you seeking advice from me on that. Those laws change all the time based upon whatever new laws the legislature puts into effect. They can change in a day's time. You need to seek the advice of an accountant. Yes, you can call the Department of Finance and Administration, but say that government employee gives you a bit of bad advice, or you didn't ask the question right, and then you get audited and you're in huge trouble because you didn't pay the proper amount of sales tax. Telling the IRS auditor, but Susan 2 years ago on line 14 at the DFA told me da-da-da-da-da. That's not going to wash with the IRS. You need to get really good advice from a good small business attorney or accountant about sales and use tax. Permits, if what you do touches a human or affects a human or their body, there is some kind of permit you have to have. Alcohol, tobacco, health products that people eat, things that people touch. You're going to have the health department, etc. So especially if your product or service affects humans, you need to be very, very clear that you have the proper permits. And we talked, here's the taxes screen, always going to be different kinds of taxes. Sales and use tax. Is your service taxable? Think about when you go to the eye doctor and you get an eye exam. And typically it's $75. There's no tax. I've never had an eye exam and been told to pay $75.46, right? That's because in most states, services from a doctor are not sales tax subject. So it doesn't happen. But when I buy a pair of cute sunglasses on the counter at my eye doctor's office, they're $49.14. Why is there sales tax on that? But when I get my glasses that are prescription, it's a flat amount. $450. That's because eyeglasses are exempt if they're prescription from sales tax. Think about when you go to the farmer's market on Saturday and you buy a bucket of tomatoes. It's typically $3 a bucket. No sales tax. But when I go to the grocery store and buy tomatoes, that tomato's $1.14. There's sales tax. That's because in Arkansas, there's a special sales tax exemption law for farmers markets. If you grow the product or make the product and sell it at a certified farmers market, there's no sales tax. See how complicated this is? This is why you have to seek the advice from a professional to understand when you do owe sales or use tax. Self-employment tax, federal and state income taxes. Once your business gets going after a year, you can't wait until March 15th, which is when business tax returns are due, to tell the government, I had $1 million profit last year. I actually earned that profit last summer. I've just been holding it, and here's your Fed tax. Good to see you. That's not the way it works. You'll have a penalty. Once your business starts earning income, you are expected to forecast that out and make quarterly tax payments in advance. The federal government wants its tax dollars quickly and as often as possible so that the government can reuse that money or invest it and earn interest on it. There are corporate state franchises tax. Any state you live in, you have to renew your LLC. You can't just file it once and walk away. In Arkansas, the renewal fee is like $189. In Oklahoma, it's only $35. So all the states are different on that. Arkansas calls it a franchise tax, even if you're not a franchise. That's what they call it. It's like your right to do business in Arkansas. And in Oklahoma, it's just your annual LLC corporation renewal fee. So each state is different on that. Record keeping, I suggested earlier that at minimum you have a separate bank account for your business and you put all the income in there and pay all the expenses out, even if you're just a sole proprietor DBA, but it becomes vital for you to have software to track your accounting for your business. Make sure you keep a list of all business assets. If you're thinking about starting a business and you're going to go ahead and buy the lawnmower yourself, keep that receipt. Keep that invoice and keep proof that you personally paid for it. Later on, you could retitle that lawnmower or that car or that truck into the name of the business entity that you start, and that can be counted toward your cash investment into the business for a bank loan later. But you need to keep proof of every major piece of equipment and every item that you spend personally for a business. Keep all of those records, because in a couple years that can help you to have less money down for a business loan. You can consult with an accountant. We have bookkeepers in Northwest Arkansas who are not CPAs. They won't file your taxes for you, but they will teach you and train you on how to set up an accounting system. Banking with the separate account, do not mingle the funds. Once you set up an LLC or a business account and you put all the income in there and pay the expenses, and after 4 or 5 months there's extra income in there and you want to pay some out for your personal needs, we call that a distribution. You write a check from the business to yourself personally, put it in your personal checking account, and then you can spend it for personal needs. You don't write a check from the business account for your daughter's Girl Scout camp. That is not a traditional business expense. That is not allowable. And you say, well, I'm the sole member manager. It's my money. Yes, but you need to start looking at yourself as a business. And if you start treating the business like it's your personal account, like it's your personal life, you have lost all the ability to limit your liability. And they call that piercing the corporate veil. And it can affect your insurance coverage for liability. And it's most certainly not going to look good in an audit if your business is ever audited. If you borrow money, on this screen I give you about banking, and I say this over and over about developing a relationship with a small business attorney, an accountant, and a banker. Let them know what's going on. If the business is in trouble, if you're thinking about expanding, don't let your business banker find out that you're planning to open a second location in another town by her husband seeing it on Facebook. You need to stay in communication with your business banker about your business plans and what you're doing, whether that's happy expansion or you're in trouble. Insurance. Here on this screen are lots and lots of different listings of the type of insurance that you will have to have, varying on the different type of business. Obviously, property casualty. If you own the building, you want it covered. General liability. People are coming into your business. But if you are, say, out in the county and you've got a county permit to have a home office and someone comes to your home to meet with you and falls down the stairs, you better be darn sure that when you started letting people come to your home and operate a business, that you let your homeowner's insurance company know that. I guarantee when you bought your house 8 years ago and weren't operating a business there, you checked a box somewhere that said, no business is operated in this home. Now you're operating a business. You didn't let your insurance agent know. Someone falls down and gets hurt, and they put in the claim they got hurt because they came to your office for business consultations. You're a business consultant and they're paying you. That injury is not going to be covered. So make sure you have proper insurance coverage. If you're selling a product, especially if it touches humans, make sure you've got liability or food safety insurance. If you have people working for you, you need workers' comp insurance. Business interruption insurance. If you operate a restaurant and we get one of those ice storms that we don't get as often now, but we used to get in Northwest Arkansas, how are you going to keep your employees employed? How are you going to protect that food in the freezer when the electricity goes out for 3 days? So business interruption insurance is not extremely expensive. And if being shut down for 1 week during an ice storm is something that could really affect your business, then you need to think about that type of insurance. Key person insurance or life insurance. Certainly you want to have life insurance for your friends and family, but it would also be good for your business to have life insurance on you as the owner. Or if the whole reason everybody comes to your business is because you have the best chef in New York City running your restaurant and everybody comes there because of that chef, oftentimes those big high-end restaurants will have a life insurance policy on their chef. Major corporations have multi-million-dollar life insurance policies on their CEOs. Because if a CEO of a major publicly traded corporation were to suddenly die, that company is going to lose a lot of money in share value for a little bit until the new person is put in place. And so those are things to think about even with a small business. My husband and I used to own a business with another person who owned 50% of the business, and they each had life insurance policies on each other, because in the operating agreement of the LLC, it said if one of them were to pass away, the other partner had the first right to buy out that person. In planning for that business to grow, we knew we wouldn't have that kind of cash to buy his family out if something were to happen to him. So we had a life insurance policy on him, and he had a life insurance policy on us, and we would use the proceeds from that to make the offer under the agreement to buy out his interest from his family. Because just because your partner passes away doesn't mean their interest in the business goes away. That is an asset, just like if they own a car or a piece of land that passes to their heirs. Personnel. Once you get to a point where you're thinking about having employees, you absolutely must contact a person who can advise you on proper employment laws. I often tell small businesses to first seek the advice of a staffing company. Go learn what it's like to have employees. Hire a staffing company. They know all the things you can and can't ask in a job interview. They will take care of the payroll. They will send people out to you to see if they're a good fit for your company. And if you just don't like them, or you think they're just not a good fit for you, that day after they leave, you can call the staffing company and say, that person's not a good fit, send someone else tomorrow. And they'll say, okay. Now you're going to pay them a fee, a certain percentage of that person's payroll to do that. But you are in essence hiring an entire HR department, an accounting and payroll department, and you get to have the ease and comfort of just trying different people. And then once you decide you want to have your own employees, you are going to have to seek the services of an HR consultant, of an accountant, of an employment attorney, because you're going to need to have an employee handbook, and make sure you take care of payroll taxes absolutely correctly. Home-based businesses, I talked earlier about making sure you know the proper zoning and covenants for that. There are some tax advantages. You need to seek the advice of an accountant about it. If you're going to take a tax break for using a certain percentage of your home, you have to be very careful that the business doesn't overtake your home and more of your home becomes business instead of where you live, because if that happens, you're going to endanger your homestead exemption on your property taxes. You need to decide what you're going to do about mail and delivery. Are you going to use a P.O. box? Do you want your address being the public place where goods are shipped? Do you want strangers knowing that that's your home? Google business listing. With Google, you need to list the actual address of your home for SEO purposes, for people to find, dance instructor, Northwest Arkansas, but then you can hide that address and just have the Google box show that you live somewhere in Northwest Arkansas. These are all the things you need to think about. Telephone. I've known people who had a personal telephone and they use that to start their business, and then they wish they hadn't because they don't want to give up that personal number, but they don't want the whole world to know it. So I tell people very early on, think about investing in a second line and having that as your business phone. Marketing. Number one on the slide, you will see, yes, you must have a website. And I'm going to say it one more time. You must have a website. I see people start businesses all the time and all they have is a Facebook. Facebook is not owned by you. They can take you down at any time. Your ex-girlfriend can call Facebook and message them and tell them a big lie about you, and they'll shut your Facebook down for several days until they investigate. You don't want someone else owning your primary source of marketing. Plus, like with Facebook, if you're a restaurant and you have daily lunch specials, people don't want to scroll down and try to find that post. They want to be able to go to your website at 2:00 in the morning and know what the lunch specials are tomorrow. The website also helps with search engine optimization. All the words you use in your website help people when they're Googling best sandwich in Bentonville, Arkansas. You must have a website. It's the place to tell the story of your business. It's the place to sell goods. It's the place for people to find all the information they need about you. Plus, it saves on marketing in that on a card, in an ad, you just put up your website address. You don't have to junk it up with your address, your name, your phone number, your email address. The website is vital and you need to have one. I talked before about the Google business listing. If you're a business, you need a Google box. I don't care if you travel around and meet with people at coffee shops as a marketing consultant. You need to have a Google business listing. Networking, getting out. I have spent my entire life. I am a third generation chamber cheerleader. We have an incredible network of chambers of commerce in Northwest Arkansas that have morning, lunch, and night events. It is a chamber membership of businesses. So if you're a business owner, if your target consumers are businesses, this is where those people gather. Further, when you join chambers of commerce, you get access to their very inexpensive advertising opportunities that are targeted to other businesses. I have seen people completely grow their business by going to Chamber of Commerce networking events, by going to independent networking events such as business groups such as BNI, masterminds of business. We have local ones here sponsored by chambers or independent, Creative Referral Network, Central Referral Network. Some of them charge a fee for you to join. The majority of them are free, but getting out in public, meeting people in Northwest Arkansas, giving them your card, letting them get to know, like, and trust you is the number one way to grow your business. People like to refer business to people they know. You need to have an advertising budget for other things such as internet advertising, directory listings, and direct mail still works in Northwest Arkansas. Several years ago, direct mail had fallen off. It is now considered to be, yes, it's a little more expensive, but especially if you offer a service to homeowners of any type and to families, direct mail, those postcards can be directly targeted street by street, zip code by zip code. You don't have to pick an entire huge area of a town and send out thousands of flyers not knowing what the demographic is of that neighborhood. Direct mail marketing companies can tell you which neighborhoods have the most children in them, which neighborhoods and streets have the most senior citizens in them. So direct mail, especially for service providers, is a great option. This slide lists for you local assistance resources we have in Northwest Arkansas. I've talked earlier about the ASBTDC. They are half funded by the University of Arkansas and half funded by the U.S. Small Business Administration. I talked about before the entity that backs the loans. They provide this to encourage people to seek small businesses. They provide free consulting research services, and they have subscriptions to market research about consumers in Northwest Arkansas. We at Startup Junkie refer people to them a lot because we have different aspects of the entrepreneur community that we support, and that's one of our main things we like to do at Startup Junkie is connect you to other groups and people who can help you. I talked earlier about the Chambers of Commerce. Every small town in Northwest Arkansas has one of those. SCORE is another SBA group, and they are typically people who are not employed to do that, whereas like the ASBTDC, that staff is employed by the University of Arkansas. They're volunteers. They're retired people who've been in business and want to help, and they also provide assistance and advice to nonprofits, which most of the resources I've talked to you earlier don't provide assistance to nonprofits, just to for-profits. We have the Brewer Family Entrepreneurship Hub in Fayetteville, so if you're a U of A graduate or a U of A student, there is help there for you as an entrepreneur. The Arkansas PTAC, and PTAC stands for Procurement Technical Assistance Center. They are a division of the University of Arkansas Agriculture for the entire state. Started with agriculture, helping farmers get contracts, but there is a PTAC employee in Bentonville named Max Franks. He will help you learn how to bid on city, state, and federal contracts. So if you do IT services, if you're a patent attorney, if you sell hay, all of those things are services that governments buy, government entities buy, and he will help teach you the bidding process and help you to get contracts. The Arkansas Food Innovation Center is located in Fayetteville, just off Garland Avenue. It's a division of the University of Arkansas, and they have a kitchen where you can go in and sign up for their process, show them how you make your salsa or your ketchup, your different baked item. One thing is they don't allow you to produce meat-based items there, but they can help you learn the proper sanitizing and preparation process. They can help you mass produce product, create your food label for you, get you a manufacturer's permit. They have a large kitchen if you're a caterer and you go through their process and they vet you and see that you do things properly. You can use their major commercial kitchen equipment to prepare large batch catering goods for parties and things like that. So they are an incredible resource at a very, very low, small expense to cover the very trained staff there. So that is the end of the presentation to talk to you about some of the basic steps and things to consider if you are going to start selling a good or providing a service to earn an income. Be that a side hustle, small income of a few hundred a month, or you're ready to make the investment and go full-time into launching your small business. Northwest Arkansas is one of the greatest entrepreneur communities in the United States. There are many people here to help you and to support you. So reach out to us at Startup Junkie or one of the other resources I talked to you about today. Thank you.